thanks to everyone who's after joining us so far. You're very welcome to today's session. My name is David Looney. I'm the Senior Financial Advisor in Alpha Wealth. I've been working in the financial services industry now myself for about 8 years. And for anyone on the call who doesn't know, we run an independent financial planning company in a place called Little Island in Cork. And we basically provide financial advice to individuals, business owners, families in pretty much all aspects of personal finances. Things like savings and investments advice, retirement planning and pensions, protection insurance, as well as some other areas. We've been doing a lot of these online financial webinars since kind of the start of COVID, and I think they've been really kind of beneficial for people just to get that kind of impartial financial advice while they might be working from at home or even indeed in their office. So today's webinar is going to be centered around mortgages and purchasing properties. Obviously, in our role as financial planners, it's something that we spend a lot of time speaking to people about, but it's not our bread and butter. It's not something we specialize in. So I'm absolutely thrilled to be joined today by Shane Canole. Shane is an independent mortgage broker with Munster Mortgage, and we're also joined by PJ Kiley of Kiley Solicitors, who specialise in the conveyancing, which is the legal aspect around buying a property or even indeed selling a property. So look, pretty much everyone on the call today will know some idea of the current state of the Irish property market. I mean, prices have gone through the roof. There's a massive undersupply of properties. And I think overall, it's just a really kind of challenging environment for maybe firstly someone to get a mortgage or get the mortgage that they need with the way prices are. And secondly, to secure a property and get on the housing ladder. So hopefully you'll get some really valuable nuggets from the guys today in terms of making the process a bit easier for yourselves and I suppose helping you over some of those challenges. So we were inundated with quite a lot of questions that came in through social media to ask both PJ and Shane. So I've just kind of picked out what I think might be the most kind of beneficial general ones. But if anyone does have any questions, look, feel free to pop them into the chat throughout the webinar, and we'll do our best to get to as many as possible. So look, without further ado, Shane, I might just start with yourself. When I'm speaking to clients, look, I always am telling them to go to a mortgage broker, don't go to their bank to get that kind of, I suppose, impartial advice. But maybe if you want to just spend a couple of moments speaking about, what exactly you guys do in Munster Mortgage and why somebody should go to, a mortgage broker like yourselves instead of going to their bank when they're looking at applying.
Okay. Hello, everybody. Just to give you a bit of commentary on that, David, really is that if you were to look at the options anybody has in the marketplace at the moment, it is you either go directly to the bank or you use an intermediary such as ourselves. You mentioned that you're 8 years in the industry. Embarrassingly, I'm going to tell you I'm 30 years doing mortgages. The company that we have does nothing but mortgages. We don't do pensions like David does. We don't do investments. We are solely specialized in mortgages, and we do nothing else. But from anybody listening in or viewing in and saying, okay, what should I do or what shouldn't I do? I suppose we'd naturally be biased, and we are going to tell you that an intermediary can offer you choice. An intermediary can save you an awful lot of hassle, and an intermediary, more importantly, can save you a significant amount of money, in particular in the amount of interest you pay over the term of the mortgage. And I suppose the negative that we'd say that if somebody was to walk in directly to their own bank is that if you were to walk into Bank of Ireland as your own bank, and let's just say that their rate is at 3%, then they're not going to tell you, nor can they tell you under regulation, that the rate in AIB is 2.5%. So by virtue of going to an intermediary, as long as that intermediary has full market access, and that's an important point because not everybody has full market access, is if you're with an intermediary with full market access, they can give you the entire market, and therefore you can achieve the best rate available in the market.
Yeah, I think that's so true, Shane. I mean, I went through the process myself a little over a year ago now, I think. And I mean, there was such a differentiation between what amount some banks were giving us, what rates some were giving us, what cashback some were giving us. So, I mean, going to a broker like yourself is pretty much like walking into every lender at the same time, isn't it?
Yeah, you can. And like again, I say to everybody listening in there that like the process is long. The process is not easy. The more prep work you can do, even if you're doing prep work a year in advance of when you might be coming to the table, the more prep work you can do, it will certainly assist you and assist your process and assist the length of time it takes to get approved along the way. So currently, if we're looking at the lender market at the moment, you could go anywhere from a 2-week process to approval to a 10-week process for approval. And generally, the ones that are taking 10 weeks are the ones who've got most of the business. Therefore, there's a reason they have most of the business. And that's generally that the rate is the most attractive rate that's there. So even speaking in your own instance, David, with it of, you're like, what we would always say to people is that you should always focus on three things. So best rate, best incentive, or the best combination between the two of those. And for us, it should always be the best combination between the two of them. So there are attractive incentives out there like the cashbacks, but there's catches in the cashbacks too. And everybody should know that straight off. Nobody gives a free lunch. But like there are catches in the cashback, and they are significant catches over the period of the mortgage. Whereas you look at the rates in the market today, you can get as low as 1.95% with Avant Money and ICS. Now that's for an attractive loan to value as well. But even if you moved away from that and you went to 90% funding, these guys are at 2.2, 2.3%. Whereas you go to the likes of the Bank of Ireland and the PTSBs, they're up into 3%. More importantly, you look at variable rates and take I suppose ICS is the market leader at the moment. Take ICS at the moment, you're working off a variable rate of 2.7 for 90% funding. Bank of Ireland is 4.5, EBS is 4.25, PTSB is 4.25. That's significant money to people over a period of time.
Yeah, and I think the message there is to shop around and go to someone like yourself that can, I suppose, give them that I suppose extensive choice. And Shane, like if there's anyone on the call today who might be like a first-time buyer, they've maybe saved up a deposit over the pandemic and they're now kind of gearing up for maybe purchasing their first property in the next 12 to 24 months. Is there any kind of advice that you'd give them in terms of getting their ducks in a row? I know when I was working in the bank, sometimes people might come in and they've got quite a substantial amount of money and they think that automatically qualifies them for getting a mortgage, and they were turned away and told come back in 6 to 12 months because they weren't doing certain things right. I mean, what's the kind of main bits of advice you give around that in terms of getting first time approval?
Well, the main thing we'd say to everybody, David, is that number one, have your ducks in a row, right? And really, like, your income is your income, and central bank rules that are applied to that are saying you're going to get 3.5 times your income. However, what you will find the one disparity in range here is that the central bank rule only applies to your basic income. So what the central bank did in 2015 is it came along to all lenders and said, you get the two basic incomes or a single basic income, and you just multiply it by 3.5 times. Now, there are exceptions to that, limited, but there are exceptions to it. However, what the central bank did not do is the central bank did not impose any restrictions on how individual lenders treated other income. So things like overtime, bonus, shift, expenses, mileage, these type of things. That's all up to each lender's own individual credit policy, how they wish to treat it. So to give you an example, if you had two salaries at 50 grand each, 100 grand, the approval level there is 350, a simple 3.5 times calculation. But if there was shift and other additional incomes involved, you could find that the range might go from the 350 to the 450, depending on the lender's own individual policy. So that's something that people should always be aware of. I suppose the other thing to be aware of for us as well is that there are 4 numbers calculations you must pass to make sure that you get approved. The one that people will be familiar with is the 3.5 times one, but the one that people are generally not familiar with is the proven repayment capacity or demonstrated repayment capacity that you're asked.
Yeah.
So each bank, if you're about to be granted a mortgage by a bank, and let's say, for example, that mortgage is going to cost you €1,000, each bank wants you to be able to show to them in the most recent 6 months to when you made your application that you can put away that €1,000 every month. If you haven't done it in the last 6 months, you're of no interest to the bank. Now, how can you show that? So how you show that is a savings record. It could be a rental record from your bank account, or it could be a combination of both. The one thing for people to watch out for is that if you're in a cash rent situation, the bank won't take any cash rent into account. And that's the big one that a lot of people fall down on. So ideally what you're looking for is you're looking for a rental commitment to be paid from your bank account called rent, or to a landlord, or to a property address. But if you're paying a cash scenario, that will not be taken into account.
There's no record of it. Yep.
Correct. Other things for people to watch out for are very much, how do your bank accounts look? And we'd often hear people come back to us and say, oh, I was in Costa Coffee 15 times a month and somebody's going to pick up on that. Those days are gone. That did happen, crash days. Yeah. Those days are gone, right? But what days are still there is that you have the banks, and the banks are assessing these on the basis of your payment ability. If they see something like online betting, typically Paddy Power or PP Online, that's still a major no-no. So if anybody out there, and if anybody came into us and said, look, here are my bank accounts, and we spot Paddy Power Online on it, we would generally send these people away for 6 months to cleanse their bank account of Paddy Power. because it's a red rag to a bull to lenders. And I suppose to go with that is that just what you're looking for is make sure that your ducks are in a row. And having your ducks are in a row are meaning that your current accounts are clean of anything such as a petty power, and that your savings record is very clear to a lender when they're looking and saying they are putting that money away. And if I could just add one more to that, David, if you don't mind, is that again, something we see an awful lot is people say, yes, I save €1,000 a month, but I spent £6 grand on my holidays in the summer. That's not saving €1,000 a month, and that's the thing that people don't always get that, but the bank get it very quickly. So if I'm saving €1,000 a month, it's staying in there. That's the key. And one final point, and again that we see from a lot of people, is not everybody saves inside a savings account. So what you have is that people will save inside their current account, but they don't consider it savings. The key message for everybody here is that the bank will consider it savings. So you don't have to have it specifically set inside in the current account.
Okay, that's really good advice, Shane. Thank you for that. Peter, just kind of moving on to yourself. So I suppose once the process progresses a bit, obviously people do have to engage a solicitor for the conveyancing. Would you mind firstly maybe just telling us at what point someone should start to engage with a solicitor, and secondly, for anyone who doesn't know, what does a solicitor do kind of behind the scenes in the process in terms of going through a mortgage and purchasing a property?
Sure, David. Thanks very much for the opportunity to talk to everyone here. First of all, in terms of timing, there's no hard and fast rules. Quite often we see people coming into us late in the day. I say late when you're going sale agreed. Ideally, we'd like to see someone come in the door to us at a point where they're looking at the market, so that we can build a relationship with them and they can build it with us, so that we know how they understand the process by which a property is purchased, and we can all work together. We know that we can work together to get the most favorable outcome. It's all about education, really, and people understanding how the process works. And ideally, we'd have all the anti-money laundering documentation in, you set up, and then when you're ready to press go, you've identified your dream home, then we'll slot in and do take the necessary steps. Obviously, there's certain times of the year that are not ideal for someone to come in last minute, and this time of year might be might be a bit tight, but it's not impossible. Miracles are worked every now and again, but it's mostly, like, no more than anything else, it's mostly driven by the funds and funding. So Shane and his team would have a huge influence on the process, unless you're a cash buyer. In a second-hand property, it would take between 6 to 12 weeks to close. It has happened faster, and unfortunately has happened slower. But it's all down to a willing buyer and a willing seller, and how we all interact with each other. With a new build, that can be as fast as you've gone sale agreed on a property, the four walls, the roof, and everything else is done and dusted, and it's then down to drawing down the funds. Or in a new build, you'll be a year to 16 months to 18 months waiting for that property to be built, and that you'll have quite probably a reasonable amount of interaction with ourselves during that period, signing contracts, binding yourself to the process, and then you'll be interacting with Shane and his team to look at the mortgage market maybe once, twice, even 3 times over the lifetime of that process and the transaction, just to make sure that you're getting the best value for money, I would have thought.
Yeah. So it's really just kind of like a hand-holding process through it, and kind of, I suppose, fighting their corner essentially between the mortgage broker and the bank and the seller and everything. And like, I know myself, and speaking to people, rarely people go through the whole process without some hiccups or kind of unexpected delays. But PJ, from your experience, is there any, I suppose, steps that people can take to make sure that the process goes efficiently as possible and they don't encounter any unexpected delays, which gets them into their house a bit later than they would have hoped?
Definitely. So if we were to look at like first-time buyers and new builds, make sure you have all your ducks in a row from a head to buy perspective, so that you can draw down or arrange for the drawdown of that money as soon as possible. That money goes directly to the builders, and there's an interaction with the revenue commissioners. So some people may find that over a period of time, they have a more favorable HGB, so it can be beneficial to delay the process ever so slightly, so that your tax returns are in, and you might have a greater pot under the HGB. If you've maxed out that pot, make sure you've got your returns in, and that when you can press go, that you can lodge those documents and get the balance of those funds into the account as soon as possible. From any other perspective, life assurance and the rest of it is very important. So you've two policies of insurance that, and Shane will probably inform you better than I, but there's two policies of insurance that need to be drawn down and put in place before you can own the property. So you need to have a life insurance policy, and you need to have a house insurance policy. The house insurance policy is equivalent to like third-party fire and theft, the minimum needed on your car. And what that does is it puts in place a process, whether it's if your house is burned down or and it needed to be reinstated, that policy would pay out. Or alternatively, if anything were to happen to you, that your spouse, your partner, or indeed your family members would benefit from the policy paying off your mortgage and the property no longer being encumbered. So at certain stages of your lifespan, you may have a more difficult process to follow just because of age. And so if due to health reasons or your age, you have to follow a protocol whereby you have to get a medical done or anything like that, it's advisable that you follow and do whatever you need to do to get that in place. You may not press go on it, you may not actually pay for the policy just yet, but you would have it. We'd be recommended that you'd have that in places or followed as early as possible.
Yeah, I'm glad you mentioned the life assurance and the mortgage protection aspect of it. It's obviously something we do in Alpha Wealth, quite frequently, and I'm always telling people that they should nearly go looking for that as soon as they get their mortgage approval, because depending on your situation, these policies do have to go through medical underwriting, and it can cause some unexpected delays. So as you said, it's good to just get the mortgage protection in place early on, and once things start progressing, you can hit the green light and get the policy document out to the lender and crack on with things, rather than doing it at the very last minute, and then you're finding out that there's forms going out to your GP to be completed and going back to the insurance companies, and you're losing 2-3 weeks before things can progress again.
And obviously this is a significant purchase for some people. It's the biggest purchase they're going to take in their lives. It can be stressful. You don't want to take on any more stress than you're going to encounter normally.
Yeah.
And I guess it's all of our jobs here to help you to navigate that. And we see it all the time. We know what's coming, and we can help you to get around it as much as possible. Obviously, there's certain things you can't get around, and you have to meet head on. But largely, we know that these things are coming, and we can flag them if we're organised, which we hope we are. We'd flag them as early as possible for you, and it's up to you to take the bull by the horns then and get those things in place.
Perfect. Thank you for that, PJ. Shane, two things that that I suppose a lot of the questions were centered around, and it's something that I wanted to discuss today anyway. Like obviously when we're doing a financial review with a client in Alpha Wealth, the first thing we start to do is look at reducing their expenses and freeing up some disposable income for them. And we always go after the mortgage, obviously, because rates have come down significantly. But I still think that not enough people in Ireland firstly know what mortgage rate they're on, and secondly, they don't look at switching as much as they should be. I mean, there's massive savings to be made through switching their mortgage. Would you agree that, I suppose, people maybe should put a bit more focus on that, given where we are? And, in your opinion, what are the kind of the main banks or the lowest rates, or what savings can people, I suppose, realize from looking at that process?
I think with it, David, and you've seen this from a previous interaction we've had with some of your clients or Alpha clients in the past, is the big thing here is make sure that there's enough of a win in the switch. So if you're looking at the market, and historically over the market, I suppose to name lenders' names, but we would generally see on a regular flow of business of people looking to switch from Bank of Ireland, PTSB and EBS. Reason mainly being that they're the guys with the higher variable rates, or that they're the guys with the higher fixed rate offer once you've expired from your initial fixed rate period. You look at the opposite end of the table and you see the likes of the AIBs, the KBCs, the Ulster Banks. You'd rarely see anybody trying to move away from these guys. So again, with everything, we say to people to just just make sure that the win is A, worth the hassle, right? And B, is worth the fee. And when I say a fee, is that the one thing a lot of people don't understand here or forget here is that there's a legal conveyance has to happen again. Not to the extent of the original conveyance, but it does have to happen. And we would always quote to people that if you're switching your mortgage, there's a fee, probably a fee outlay to you in total of about €1,500. That covers the solicitor, that covers the restamping of some of the deeds that have to be done, and it probably covers a valuation fee. So the first thing we'd say to people is that if you are going to save, €500 a year on your mortgage by switching, the first 3 years in that scenario are taken up with a fee payment. Now, that to us may not be a financially smart move. And undoubtedly, you would save money by the switch over the term of the mortgage, but it's to try and get yourself to a position where you're going to save significant funds. And again, in an overview in the market, which is all a bit strange at the moment, you've Ulster Bank leaving, you've KBC leaving, you have the non-bank lenders of ICS, Avant Money and Finance Ireland in, who are all very strong rate-wise, but don't offer incentives to you to switch. So for example, the switching market with incentives at the moment is KBC are still open for business. They'll pay €3,000 for the pleasure of you switching to them. In that scenario, you've a cost outlay of €1,500 and you're putting €1,500 in your pocket. AIB will pay €2,000. Aside from that, you're looking at Bank of Ireland, PTSB and EBS paying their cash back. But anybody who's looking to switch up to a cashback lender, like we would say that's not a wise move for anybody. So if you look at the lower end of the table where the attractive rates are, only one of those 4 lenders is offering an incentive to switch, which is AIB at €2,000. But you look at, again, switching, and I see some of the questions coming through there, is that if you can get your LTV under 60% here, you can get an attractive rate of 1.95% long-term fixed on the marketplace. AIB's fixed rate is 2.55. So they may have paid €2,000 for you to switch, but 1.95 is a very attractive rate. So it's, again, know what's available to you and then make your decision. And like everybody, you mentioned there, David, everybody should consider it and should consider, should I switch or should I not? Excuse me, but ensure and make sure that the financial win of your switch is worth the effort that you put in.
Perfect. Yeah. So what you're saying there, I suppose, is, for example, if somebody who's up in the kind of mid 3% with, say, a Bank of Ireland or something, they can switch to a KBC or EIB, get the 3,000 cash back, let's say, to take care of their legal fees and their associated costs, and then move on to a lower rate, which will save them a whole ton of money into the future.
Absolutely. And the other one, David, just to watch for here as well, is that you have like, if you have a long-standing mortgage, so if you viewers here or listeners here know who have a long-standing mortgage, and if they weren't paying attention to it, you could have ended up on a standard variable rate with any lender. And every lender's standard variable rate is a higher variable rate to the rate that they're actually offering if you walked in today and asked for a variable rate. So you could have people there paying 4.5%, even with the good lenders. Now, if you're paying anywhere near 4% on a variable rate, you seriously want to be considering switching your mortgage.
Yeah, I agree. Definitely. And I suppose the other thing, and maybe this is kind of, I might get both of your perspectives on this, is, but like we were kind of dealing with a lot of clients that maybe they were working for, a multinational up in Dublin, they were living in Dublin, paying, Dublin prices, and now they're working from home, so they're looking at selling up the house in Dublin and moving back down to Cork. So there's a lot of maybe moving or switching houses going on. I suppose, Shane, from your side, is there anything that people should, I suppose, bear in mind when it comes to maybe selling the house that they're in at the moment and moving house, or even PJ from your side?
Yeah, PJ, you want to take that?
Well, if you came to us where you were changing house, changing mortgage, or anything like that, we'd be looking to give you a pro forma list. You need to have your ducks in a row from a variety of different perspectives so that a willing buyer can actually take the house off your hands. Just to give you highlights and not to overburden people, but their LPT, make sure your NPPR is in good condition. Get a BER cert that's not less than 10 years, or not greater than 10 years old, and there's a variety of other different bits and pieces that you're going to need to have in place. Obviously, if you're then in a chain, so the whole process is elongated. So if at all possible, and Shane can probably speak to that better than anybody else, if you're able to sell your house and buy a house independently, you're out of your chain. If you are tied into the chain, then you have to draw down your mortgage same day as the day you pay it off, which is entirely possible. It's just a bit of a headache. That's all.
Perfect. Thanks for that. And Shane, just back to yourself, because there's a lot of questions coming in around, help to buy or any kind of, grants or any bit of help really for kind of first time buyers or those trying to get on the property market. Would you mind maybe just kind of briefly explaining the help to buy or any other kind of, I suppose, assistance that's there for maybe first time buyers at the moment?
Are we doing okay for time, David?
Yeah, we are. Yeah.
Can I just roll back one important point there on the previous question that PJ answered, just with regard to somebody who was working with one of the multinationals in Dublin and they're now living in West Cork and they can work from home. It's a new thing to the market. It's a new thing to underwriting, and it's quite popular at the moment. The one issue that it has caused for lenders is you always had this thing that if you were traveling more than 100 kilometers a day to work, that it would be a problem. Now, unfortunately, you'd have people living in Offaly and Laois and the surrounding counties there that are working in Dublin, and the lender always treated that as no bother, right? But if you were working in Limerick and living in Cork, the lender treated that as being a problem because the length of time it took you to do the 60 miles. But the one thing to be careful for anybody in that type of a scenario is that what the lender is asking for is that the lender is asking for your employer to confirm that they are okay with you to be working remotely. And that is, so if you're in a scenario where somebody is saying, we're coming down from Dublin, my employer is Google in Dublin, but I'm now living in West Cork, they will seek HR approval or written approval from HR that confirms that the applicant is okay to work from home. If the employer does come back, which again, we've seen quite a lot, and say, oh, there's a requirement to be in Dublin 2 days a week, that's a different ballgame. So again, just for anybody in that, just be careful of that.
Okay, perfect.
Okay.
That's good advice.
Right. On the HDB, again, fantastically popular. In our own opinion, we tell you it is money for jam. Money for jam, meaning there is no catch to it. The only real restriction is that you have to stay on the property for 5 years. So again, be careful of that one. But in terms of qualifying for the HDB, the key areas that you got to be aware of here is that it must be a new house. The house cannot be worth more than 500,000. It can be done for I'm buying a new house in a development, and it can be done for I have a site and I'm building on it. The loan to value cannot be less than 70%. And the final condition on it is that it's done as a tax rebate from the revenue, and it's done on the cumulative of the tax you have paid over the last 4 years. So we had an example recently where somebody was back from Australia, but they were in a high earning job, and they had paid all the 4 years worth of tax in 1 year, in a year and a half worth of employment in Ireland. And that's fine too. It's not over the 4 years, but just be aware of that. So it is over the cumulative total of what you paid over the 4 years. I'm supposed to give you the downside example of it is that the help to buy was 5% of the purchase price of the house to a maximum of 20,000 pre-COVID. As a COVID stimulus by the government, they increased that to be 30,000 and a maximum of 10%. So that was kicked on in the most recent budget again for all in next year. We don't know where it stands after the end of next year. And in terms of qualifying for it, the one thing for people to be careful of, and again, this is the cumulative of the tax payment, is that if your house is 350,000, the max you can get is 30,000 as long as you pay the 30,000 in tax. If you've paid 12,000 in tax, it's 12,000 is your help to buy amount.
Yeah. Perfect. And I think the differentiation there between kind of whether you're buying a new house or a second-hand house is very important for the help to buy. So just to be clear, it only extends to people building a new house or a new house. And PJ, I suppose from your side, is there any kind of advice that you could give people around maybe the differences and from a conveyance point of view between buying a new house or a second-hand house? Is there kind of extra, I suppose, hoops to jump through if they're buying a second-hand house versus a new house?
They come with their own nuances, to be honest with you. So the vast majority of the properties that are on sale in the market or have been traditionally on sale in the market have been second-hand properties. So a solicitor would be very familiar with that process, and it just it's a review of title process to green light the acquisition. The build process for a new property, it's a longer process certainly. There's a quick flurry of activity at the very start, and that's around signature contracts and making sure that you're covered from a subject to finance provision perspective on your contracts. I know there was a question there earlier about maybe change in circumstances, and I won't speak to the mortgage element of it, but I would suggest that you talk to your solicitor if you've signed the contract just to understand what your options are. normally there's a special condition inserted into the contract that protects a purchaser in the event that they're unable to draw down their funds. And after that, then the sooner you if it depends on whether or not you're proceeding. And if you're not proceeding, the sooner you let that builder know, the better, because obviously in certain circumstances, the builder will have released your deposit, or the builder solicitors will have released your deposit to the builder for use in the construction of that property. And they will need somebody else to come into your place to release that deposit to you. And there may be a bit of a bun fight around that, but at least you do have protection that I guess over a longer period that you will get your deposit back. At the very end of the process, so there's a lull, nothing happens, the property is being built, and at the very end then you'll see a flurry of activity again, where I recommend to my clients that they get good at crying on site if they need to be able to get to the top of the queue, talk to the foreman, make sure that they're front and center, and make sure that they have a good relationship with anybody on site that's working on their property. They will need to retain an engineer. That engineer's job is to review the property just before drawdown to make sure that the snags are done, that there's nothing material needs to be sorted. And, for example, if the windows aren't in or anything like that, and that anything immaterial or small that needs to be completed is done on time. Just remember that, so you only have your leverage as long as you are withholding your money. And the builder will be very keen to complete once they know that the money is on the way.
Perfect. Thanks very much for that. So guys, look, obviously this is something that we could be here till probably Sunday afternoon speaking about, but we'll probably have to cut it at some point. Look, thanks for everyone who did send in questions both during the webinar and prior to it. We unfortunately probably didn't get to any, but if there is, I suppose, anyone who needs to get in touch with either yourself, PJ, or either yourself, Shane, how can they contact you guys?
As for me, as an email address, shane@munstermortgage.ie. That word that's badly misspelled often, MORTGAGE. Happy to take any emails that come in it, and I'd expect there'll be a fair few queries, so just bear with us a small bit. It might take us a small bit of time to reply to everybody, but everybody will be replied to.
And it's the same for us. You can reach me at pj@kileysolicitors.ie, KIELY, solicitors, all one word, .ie. Happy to take any queries. We're here to help.
Yeah, and I might just say there as well, guys, that I have seen both PJ and Shane in action, and they are excellent at what they do. So I would encourage anyone who's looking to get a mortgage, or going through the process of purchasing a house or selling a house to definitely get in contact with the guys. Guys, really do appreciate your time today. Look, there was a lot of
you had to say that. You had to say that.
And of course, for any financial planning needs, you can get on to Alpha Wealth at dlooney@alphawealth.ie. So I had to throw